Welcome back to the channel, everyone. Banks have been a cornerstone of our financial systems for centuries. But have you ever wondered whether they truly have your best interests at heart? While banks provide essential services, their primary goal is to make profits, and sometimes this can come at the expense of their customers. In today's video, we'll uncover 15 reasons why your bank may not be the financial ally you think it is. By the end, you'll have a clearer understanding of how to navigate banking systems wisely. Let's dive in. This is Wealthlocity. Here you create, protect, and grow your wealth fast. Banks are notorious for charging hidden fees, from maintenance fees and overdraft charges to ATM withdrawal costs and foreign transaction fees. These fees might seem small individually, but they can add up to hundreds of dollars annually. Many customers only realize how much they're paying when they carefully review their statements. These fees are often buried in fine print or attached to services you didn't even know you opted for. Regularly review your bank statements and ask your bank for a detailed explanation of all fees. Shop around for accounts with minimal or no fees. While overdraft protection might seem helpful, it's often a money-making trap. Banks charge hefty fees for each overdraft transaction, and many customers unknowingly trigger multiple fees in a single day. Instead of declining transactions when funds are insufficient, some banks allow them to go through, ensuring they can charge an overdraft fee. This practice disproportionately affects those already struggling financially. Opt out of overdraft protection unless it's absolutely necessary, and keep a buffer in your account to avoid unexpected charges. The interest rates on traditional savings accounts are often so low that they fail to keep up with inflation. While your money sits in the bank, its purchasing power diminishes over time. Meanwhile, banks use your deposits to fund loans and investments, earning significantly higher returns. Essentially, they profit from your money while offering you minimal rewards. Look for high-yield savings accounts, credit unions, or investment options that offer better returns on your money. Banks often pressure customers into signing up for additional products and services, such as credit cards, loans, or insurance policies. These products may not always be in your best interest and often come with hidden costs or unfavorable terms. Employees are frequently incentivized through sales targets, which means their recommendations may prioritize the bank's profits over your financial well-being. Always ask for detailed information and read the fine print before agreeing to any new financial product. Loan agreements from banks are often filled with complex jargon and fine print, making it difficult for customers to fully understand the terms. This lack of transparency can lead to unexpected costs, such as variable interest rates or early repayment penalties. Banks rely on customers not fully grasping these terms to maximize their profit margins. Many borrowers only discover unfavorable conditions after they're locked into the agreement. Consult with a financial advisor or lawyer before signing any major loan agreement to ensure you fully understand the terms. Credit cards are one of the most profitable products for banks, thanks to high interest rates, late payment penalties, and various fees. If you carry a balance, you could end up paying double or triple the original amount due to compounding interest. Banks design credit card offers to appear attractive, with perks like reward points or cashback. But these benefits are often outweighed by the costs for those who don't pay their balance in full each month. Use credit cards wisely by paying off your balance in full and avoiding unnecessary purchases. Banks are for-profit institutions, and their primary obligation is to their shareholders, not their customers. This means their decisions are driven by the need to maximize profits, which can result in practices that are not always customer-friendly. From cutting customer service resources to implementing higher fees, the customer experience often takes a backseat to profit-driven strategies. Consider switching to a credit union or community bank that prioritizes members over shareholders. During financial crises or personal emergencies, banks may not offer the flexibility or support you need. For example, they may be reluctant to negotiate loan terms or waive fees, even if you're facing genuine hardship. This lack of empathy can exacerbate financial difficulties and leave customers feeling abandoned during their most vulnerable times. Build an emergency fund to reduce reliance on banks during crises, and explore alternative financial institutions that offer more personalized support. Many banks have scaled back on in-person services, pushing customers toward online banking and automated systems. While these tools are convenient, they often lack the personal touch needed to resolve complex issues. Long wait times, unhelpful representatives, and limited branch hours can make it frustrating to get the assistance you need. Choose a bank known for excellent customer service and invest time in learning how to navigate their digital tools efficiently. Banks often offer investment products, such as mutual funds or retirement accounts, that come with high management fees. These fees eat into your returns over time, making it harder to build wealth. Many customers trust their bank to provide sound investment advice, but the reality is that these products are often designed to maximize the bank's profits. Research low-cost investment options like index funds or robo-advisors to reduce fees and increase your returns. Banks collect vast amounts of data on their customers, including spending habits, income levels, and financial goals. This data is often used for targeted marketing or, in some cases, sold to third parties. While banks may claim to protect your privacy, their data practices can leave you feeling exposed and exploited. Read your bank's privacy policy and opt out of data sharing programs whenever possible. Many banks impose strict requirements for maintaining accounts, such as minimum balances or direct deposit mandates. Failing to meet these requirements can result in monthly fees or even account closures. These policies disproportionately affect low-income customers who may struggle to meet the criteria. Look for banks or credit unions with no minimum balance requirements or hidden fees. While banks have the resources to educate customers about managing money, most don't prioritize financial literacy. Instead, they focus on promoting products that generate profits. This lack of education leaves many customers vulnerable to making poor financial decisions. Seek out independent financial education resources to empower yourself and make informed choices. Loyal customers often receive little to no rewards for their long-term business. Banks focus more on attracting new customers with promotional offers than rewarding those who stay. This practice can leave long-time customers feeling undervalued and overlooked. Periodically review your banking relationship and switch to institutions that value customer loyalty. Banks create a system where customers are heavily reliant on their services, from loans to credit cards and payment processing. This dependency makes it difficult to explore alternative options or gain financial independence. By keeping customers within their ecosystem, banks ensure a steady stream of revenue while limiting competition. Diversify your financial tools by exploring fintech solutions, credit unions, or decentralized finance, or DeFi platforms. And there you have it, 15 reasons why your bank may not be the friend you think it is. While banks provide essential services, it's crucial to understand their motivations and navigate their systems wisely. Which of these points surprised you the most? Let me know in the comments below. Don't forget to like this video, subscribe for more financial insights, and share this with someone who could benefit from this knowledge. Thanks for watching, and I'll see you in the next video with more money in your pocket.